There is a man somewhere in Manhattan right now wearing a very expensive suit, sitting in a very expensive office, staring at a very expensive Bloomberg terminal, managing your money. He has an MBA, he has a team, he has a subscription to things you have never heard of. He works 60 hours a week analyzing earnings reports, economic indicators, and market signals that would take you a decade to understand. And there is an overwhelming statistical probability that he is losing to a fund that does absolutely nothing. This is Wealth on Autopilot. Subscribe, stick around. Here is a fact that the financial industry would prefer you not think about too hard. Over any given 15-year period, approximately 92% of actively managed funds underperform a simple index fund. Not a few of them, not the bad ones, nearly all of them. The funds run by the smartest people in the room, with the biggest budgets and the most sophisticated tools, consistently lose to a fund that essentially just sits there. An index fund does not make decisions. It does not have opinions about the market. It does not panic, speculate, or get excited about anything. It simply tracks a broad market index, like the S&P 500, and owns a tiny piece of everything in it. When the market goes up, it goes up. When the market goes down, it goes down. And over long periods of time, the market has always gone up. That is the entire strategy. It is aggressively boring. It is also demonstrably correct. Here is why the expensive fund manager keeps losing. Every decision costs money. Every trade, every analysis, every salary on that team gets passed directly to you in the form of fees. The average actively managed fund charges somewhere around 1% annually. The average index fund charges somewhere around 0.03% on a $100,000 portfolio over 30 years. That difference in fees alone costs you approximately $200,000. $200,000. Gone. Not to bad investments, not to market crashes, just to the privilege of paying someone to make decisions that statistically make your returns worse. Here is what you are going to do instead. Open a brokerage account if you don't have one. Search for a total market or S&P 500 index fund. Look for an expense ratio below 0.10%. Set up automatic contributions. Leave it alone for 30 years. That is it. That is the move that beats nearly every professional investor on Wall Street. No Bloomberg terminal required, no MBA, no expensive suit, just a boring fund, doing nothing, quietly compounding while you go live your life. If you're ready to stop relying on discipline and start building a system that actually works, everything you need is at bluewave-marketing.com. Free guide, no gimmicks, just the boring stuff that works. Thanks for tuning in. Now, go find your expense ratio.